Hi there, everyone. I thought I'll share quickly about what we talked about today at the learning session, and that is more about technical charts. We had a fantastic video that released about part one of technical charts, and so this is part two. If you have not seen that video yet, I encourage you to go back to the playlist and watch that. But let's get on with part two of the technical charts. All right, and so if you're new to our channel, please make sure that you hit the subscribe button and follow us. We will have videos up regularly. Please make sure that you follow us so that you can watch these videos for free. All right. And if you have any doubts and questions, you can contact me as well. So now we're going into part two of how to read technical charts. Okay. So what did we cover last time? We found out that technical charts are needed to find winning stocks that whether to buy or sell. What are the stocks that we should get in? What is the price to enter the stock, whether we're buying it or selling it, and what's the price to exit the stock, regardless of whether we are buying or selling it. Okay. We also found out what do we do if we do not use technical charts. Well, the answer is that we are investing blind, and so it's important that we use technical charts. Now, today I'm going to talk a little bit about market trends, okay, and a few other things as well. So, market trends is basically I decide to enter a stock based on the market trend of the overall market as well as the stock itself. So what do I mean by this? For example, the market might be on an uptrend or it might be sideways or it might be on a downtrend. And so when I want to enter a stock, if the market as a whole is on a downtrend, it doesn't make sense. It's not safe to probably buy into that share. It would probably make sense to sell the share if the trend of the market and the share are in the same direction. So it's always important to follow the direction of the market trend. Okay. And now when it comes to a share, so for example, this is a share that I invested in yesterday. It's called Coromandel. And Coromandel, I realized it was causing a breakout at about 580, 583. And so I always use the 15-minute technical chart for intraday, but because I want to watch the market trend as well, what I did is I always use a higher time frame to check. Okay, so I use a higher time frame to check for market trends. I use a lower time frame, like say a 3-minute or a 5-minute technical chart to check for momentum. So let's look at this. Okay, so I move to a 1 hour time frame, and you can see here's the spot that I was checking, and you can see there that the MACD line has cut. Okay, at the chart below, see that the same time when I observed the trend in the 15-minute, there was a cut in the and a positive buy signal in the MACD line, and so I bought it, and I bought it at 584, and it eventually went up to uh, 609 is when I sold it, but 607 is when I sold it, but it eventually ended up at 617, 613, right? And so this is a very quick way that I made some money simply because I used the technical charts and I observed the market trends. All right, let's look at other things. We look at triangle patterns. Now, in a technical chart, you can see how many times stocks will behave in a triangle. The oscillations of the stock will go in such a way it forms a triangle, and then it breaks out either upwards or downwards. Okay. Let's look at this example, Tata Communication. You can see that it was forming a triangle. This is between April 17 to April 29, and then it broke up. And you can see how when it broke up, it broke out of the triangle, it went all the way up, 73 plus 380. All right. And so this is an example of a triangle breakup, all right, in the positive direction. There's also, let's look at United Spirits. This is from April 16 to May 5th. And you can see here that there was a break in the trend of the triangle, and then the result is that United Spirits or McDowell went all the way down from 525 to all the way down to 493. Okay, because it broke the triangle. And so this is something that you will learn over time to draw these technical charts, to draw these triangles, these patterns, and observe when they break. When they break, it is an indicator to either buy or sell depending on how the break is. Okay. Now there are also channel patterns. Now I want you to know that resistance and support doesn't always work in horizontal lines. It can sometimes be at angles, and so you can observe here. This is ONGC. You can see how there is a channel being created. The oscillations are slowly coming smaller, and so there's a channel that's being created. But at the same time, it's not a triangle and it's not straight lines or horizontal lines. These are at angles, and you can see here there's a bit of breakout on the 30th of April. And as a result, even though the market went down overall, the next 2 days, ONGC actually. And this can work in the opposite direction as well. Here you can see Asian Paints, and look at this channel. This channel is upward trending channel, but what happens is on the 29th of April or 28th of April, there was a breakdown here. Okay, there was a break in the channel, and because of that, if you entered in at about 1810, within the next 2 3 days, you would have ended up at 1617. That is a decrease of almost 200 points, or 9 to 10% decrease, because it broke the channel. So again, if you draw these channel patterns on your technical charts, you can make sure you can realize when you need to buy, when you need to sell, what price to enter, what price to exit. Right? Simple patterns. Okay. There's another thing called the trend line, and here what happens in the trend line is, you can see here, uh, the trend lines are always lines, single lines patterns that you draw, because you can't form a channel maybe or a triangle in that condition. And so we're looking to see if a share breaks the trend line. A trend line is basically a resistance or a support. You can see here, for example, Wipro keeps bouncing off the resistance, right? And one day it breaks free, and there you go. Once it broke free, you can see how broke through the resistance. You can see how the another buy signal has formed up here. Right. This didn't go too much because of the big fall in the market, but had that big fall not happened, again market trend reversal, this would have probably gone up much higher. And here you can also see how this works the opposite direction. You can see here Siemens on a trend line. It had been bouncing off the support 1 2 3 times, and then on 27th of April, it broke the trend line at about 1140, and you can see as a result, uh, came down to 1066. Again, another 100.4, 8 to 9% decrease, because of the trend line. And so here you can see how we use technical charts using market trends, triangle patterns, channel patterns, and trend lines to see and figure out which stocks to enter, and at what price to enter, what price to exit. And this almost always works, because unless there is a severe reversal in the trend because of some outlier market condition, more or less always work for us. And so I think it's very important that you learn how to use technical charts. If you want to know more, please continue to follow our YouTube channel. Please click the subscribe button right away, right now. And if you have any queries, you can always WhatsApp me on this. Thank you so much.